All right, so guys, it's Friday, and I just drank at my company's dinner. So right now, I'm not exactly the most sober that I can, but let's cover some news today. So, all right. So first of all, let's talk about how the indexes are all going down. It's crazy how they are still going down. Okay, so right now, if I'm not mistaken, the S&P is down about 9% year to date. Okay, in the first month or so, we are down 9%. So in the last year, in 2021, S&P did 29% year over year. Basically, in the first month, they already took back 9%. Okay, and this is on track to be the worst month since the financial crisis. But we'll see how it goes. Oh, wait. Actually, before that, let's talk about earnings. Let's talk about earnings because I think earnings is where it's actually interesting at. Okay, let's look at CNBC because I can see the EPS and such. All right, so for people who do not know, this is the earnings expected. We expected $1.89 for EPS. Apple hit $2.10. The revenue, we expecting 118.6. It hit 123.9, over 5 billion extra. iPhone revenue a lot higher, service revenue a little bit higher, but still very, very good because service sector, usually we didn't expect the service revenue for Apple to be this high usually. Other products is also high. So for the other products, usually it comes from like your AirPods and like your AirTags and such. Mac revenue also up, more than $1 billion in revenue as well. The only thing that's down is iPad revenue, which is a little bit, well, I won't say weird because I kind of expected iPad revenue to be doing quite well because I thought that the demand for iPad is quite high. Apparently, I'm wrong. But anyway, gross margin, basically everything is up. And for the forecast of Apple, Tim Cook said something that's quite interesting, which is what we expect for the March quarter is a solid year-over-year revenue growth. Okay, so basically, we expect supply constraint in March quarter to be less than they were in the December quarter. So if we actually do not care about what the forecast said, what Tim Cook basically said in this statement alone is saying that we are going to go into a recovery state of things and supply chain issues are going to go away in the next year. In this year, basically. So, yeah, I mean, this is so-called like very, very good news. But, hold on, man. You think that this is good news? It's not really that good of a news because good news gives us bad results. Bad news gives us worse results. And because we got good news for Apple, okay, you think that Apple is going to be up by a lot. I would think so as well. Well, it's not. Apple in the after hours went all the way to about 6%. And right now in pre-market, they're barely up 2%. For a company, the biggest company in the world, reporting earning, having triple beats on all metrics possible, the only thing that is down is on iPad revenue, which isn't even an actual matrix. They beat on every single thing. On expectation, your bottom line, your revenue, and even for forecasts with Tim Cook saying something so bullish, saying that like in the next quarter, the supply chain is going to be a lot better than it is than in December. And Apple is not even up by a solid 5%. Come on, man. Come on, man. It's crazy. The reason... I drank a lot at the company dinner because I was like kind of thinking, it's gonna be a shit market later on anyway. So I just kept on drinking and stuff. But dude, I don't even know if I can trade properly in the open hours. I'm gonna go and shower in a bit. But yeah, I mean, it's kind of how it is. Okay, all right. Apple aside. Okay, yeah. Apple CEO Tim Cook, everybody's seeing inflationary pressure. Okay, fair enough. I think in the earnings call, basically Tim Cook said something along the line of like everyone's basically going through this whole inflationary pressure. Hence, it's starting to become a new norm, and it shouldn't be taken into it shouldn't be taken onto like it shouldn't be put on a pedestal for people to say that because this this company is getting extra inflationary pressure, such as the EV sector or your chip manufacturing sector and such. So, I mean, it's not exactly bullish, but it's not exactly bearish either. So, I don't know. Out of 180, okay, I actually opened this up simply because I wanted to check for myself. I kind of want to go overseas with my friends. So, no, I'm not going to show you guys. Newsom says California is doing the hard work to fight climate change, not just taking a good game. Gavin Newsom said the state's in a transformational moment to shift away from fossil fuel as climate change, which is a lie. Gavin Newsom basically said that, he want to get rid of I think solar energy, or he was trying to create a new tax on solar energy. He's damn stupid, but yeah, I'm probably gonna go and properly research on this before I actually talk more about this anyway. Let's go back to Wall Street Journal, because where 6 meme stocks investors are now. Let's see. I am quite okay. Joanna Burns is expecting AMC shares to rally again. Okay. Ventura County in California, resident became interested in investing last January when Reddit the Wall Street bets from short to prominent. She made her bet on AMC. She's holding a stock, believing the shares are undervalued and will rocket higher when the price begin to rise as short sellers. Those betting against the AMC buy shares to cut their losses. She said she's sitting on a profit after initially buying shares at about $13 and adding to the position higher. Right now, it's about $14. Not that good of a trade. Not gonna lie. If the shares do rise as she expects, Miss Burns would like to use profits to pay off student loans and buy a home. Well, good luck for that. It's really capitalizing on the opportunity to gain financial freedom as well as to finally win in a rigged game. I'm sorry to say, trading in meme stock is not getting you out of the circle. But we still do it for the memes. So, all right. With COVID, it allowed a lot of introspection. I've decided to step out of, I guess, what you would call a rat race. I don't know, man. Done with the meme scene. The whole meme stock saga is not a sustainable way of trading. Right here, dude. Right here. Okay, I'm just gonna give you guys a little bit of something since I'm not exactly super sober. I did trade a lot of meme stocks and I made a lot of money on trading all these meme stocks as well. But at the same time, right now, I'm still caught holding the bag of some of the meme stocks. Well, not really some, just two of the meme stocks, which is AMC. And another one, which is Castor Maritime, CTRM. But for Castor Maritime, basically down about $1,000 or so I don't really care about it. But for AMC, on the other hand, I'm now still holding on to about 200 shares or so. And my average price right now for the AMC is about $30, $32-ish. But yeah, I mean, of course, I'm down on those. But I did make a lot of money on AMC, so I can't really complain. But yeah. Let's go. Let's continue. Since then, he decided it isn't for him. One turning point, he got burned on an investment in the e-commerce Context Logic. Oh no! He got into Wish. After hearing about the stock from his cousin, he poured thousands of dollars into shares starting in June. The price tumbled after, and he sold out the investment with a steep loss. That was the one that made me realize, hey, all your gains on GME and AMC were probably just luck. Using the ticker for GME and AMC, they weren't based in fundamentals and research, and it was based on emotion and sentiment. Before I actually say anything about it, I don't think that the whole entire meme stock saga was just based on emotion and sentiment. Of course, to a certain extent, I would say 90% of that is true. But it is true that for fundamentals wise, there is a play to do with AMC because as much as people don't want to admit it, short selling stocks and having this short squeeze is still a legitimate strategy for trading, but it's just not going to be easy for you if you are buying in at a super high price. Because imagine this, you buying into AMC at $50, and right now look at AMC at $14. It's not going to make you feel good, okay? And this is an emotional trade, and you are gonna be so stressed out. And every single time AMC comes out with a new crash, going down to $12, going down to $10, going down to $8, going down to $4. Do understand that AMC at one point before this entire pump, it was only worth $2. So right now, even at $14, it is considered overpriced. So yeah, if you're still into the whole meme movement, I don't know, man. Just kind of rethink it a little bit. Okay, he says he wishes he hadn't sold out tech behemoth like Tesla and Apple in favor of meme stock. He also dabbled in cryptocurrency, and he recently cashed out of a position in Dogecoin. Oh no, this guy is a full degen. He's a full ape, dude. If I've learned anything, it's that buying and holding is the smartest thing to do. That's true. That is true. I'm going to tell you guys right now that buying and holding is definitely going to be the best thing to do, because I haven't been doing that, and I have been suffering some losses on my end as well, especially with how the market is moving. And when you actually try to time the market like I do, what happens is you are trying to time the market 3 to 4 times instead of just timing it one time, which is when you actually buy in. When you actually try to time the market via options, you are basically trying to time the market when you go in, when you go out, when the market is going to go up, when you are going to get money without getting your money getting theta decayed on, when volatility will not crush your entire option position and such. So yeah, buying and holding, I'm not gonna lie, very underrated. Very underrated. Okay. Boring. All right, let's look at Bloomberg. Wall Street bet on Chinese market is going all wrong. Oh no. The bar for China's financial markets is to do better this year was so low. Virtually everyone on Wall Street was saying the country's stock and bonds could only go up. All right, so I did say something along that line as well for my 2022 prediction for the stocks market. And I said that, Chinese stocks in 2022 probably will be going back up, simply because, like what the similar to Wall Street consensus as well, because especially with what Evergrande happened and with all the regulatory movement that's happening in China, basically everything is down, and because of that, it kind of makes sense for us to actually load the boat for people who are actually very dedicated and convicted to hold on to Chinese stocks. And I think that would be the best time for them to actually do so. Because right now, prices are so low. Alibaba is so low. Tencent Music is low. Bitoto is low. Didi is low. Everything is low. And it kind of makes sense for you to actually load the boat now. So I wouldn't blame you guys for actually thinking that would be a good a good trading strategy to do so. But the market is still going down. So right now, I don't know, man. Right now, the market is just confused. Lack of a better term, confused. The market do not know what it wants to do, and the market is very, very confused. But anyway, let's go back to this. Well, it's only January. Mounting laws are testing the ability of policymakers in Beijing to support markets after the chief securities regulator vowed to firmly prevent volatility. It also confounding those on Wall Street who predicted easier policy out of Beijing would be the catalyst needed to revive China's beaten down assets. Authorities have cut interest rates and pledged to do more to support the economy. Signs of Beijing unease over the equity market slump are showing up as visible measures of support from front page articles in state media appealing for calm to some of China's largest mutual funds, publicly committing to buying their own equity-focused products. This is basically going back to the whole Evergrande situation, and everyone expected after the whole Evergrande situation is done, things would be better in China, but of course, evidently, it's not really doing as well. So, I don't think it's just the Chinese market at the same time. I feel that we also have the whole Russian-Ukraine situation putting pressures on the market, in the global market, to say the least, not just in the US market. And at the same time, we also have your Nasdaq, your S&P and Dow trading new lows every single. Hold on, yeah, like trading new lows for the year every single day, and it's kind of concerning. And even with something like Apple, reporting something that's so good, it's kind of weird for us to look at Apple reporting earnings and still seeing horrible forecast for the entire market. So yeah, honestly, I feel that I'm not going to be very, very hopeful for today's market either. I think for the next week, it's still going to be a little bit bad for the market, to say the least. But yeah, I mean, we also have Robinhood's earning yesterday, which was horrible. Like, I went through the entire Robinhood's earning; it was horrendous. Like, you see that they have 25% lesser users. They are doing lesser asset management. They have lesser assets in general. And yeah, I'll probably be doing a video on Robinhood as well to talk about the entire Robinhood situation. But yeah, it's crazy how one quarter can change so much, especially when you're on the wrong side of history with against the apes, the whole GME, AMC apes and such. But yeah, that's kind of how it is. Okay, anyway, before we end the news today, same thing because it's Friday, and I'm gonna tell you guys what other trades that I've done this week, which is not a lot. Okay, I'm gonna be honest with you guys, not a lot. So let's go through some of the things that I actually bought. Okay, I bought more Apple puts, which evidently is not doing very well because even then we have Apple going up. But you know, if Apple is still wanting to kind of trend downwards, we don't know. If Apple want to trend downwards, I'll be very, very happy to collect my winnings for those puts. I bought puts on AMC. This is the first time I bought puts on AMC because I always didn't want to bet against AMC, but I think that it only makes sense for me to buy puts on AMC. These are, of course, all the money. And yeah, I mean, it's out of money. So I don't know what will happen with those. I bought Peloton puts, clearly, because Peloton is going to be going through an earning cycle as well. And I'm basically just going through the motion and see how it actually turned out. So, yeah. I bought calls on Hut 8 mining, which is basically me trying to see a recovery on the cryptocurrency scene. I think that Hut 8 would be a good play on it. I also bought calls on Marathon Digital. Same thing with Hut 8. It's just trying to see if I can get a return for the recovery on the cryptocurrency, which I think that, of course, cryptocurrency is not going to be dead forever. And these are going to expire in 2023. So I still have like about 12 months for me to play out these options. Afterwards, I bought calls on Boeing, which evidently is not really that good of a thing. Kind of regret it, but those are probably gonna expire worthless. And I only put in about $435 into those, so those are gonna go to nothing. But yeah, those are basically my trades for this week. Not as many, not as much as the trades I used to do, because right now basically the market is very, very confused, and the market is very uncertain about what it wants to do. We cannot really play into a bullish market, nor can we play into a bearish market, because into a bullish market, we don't know if we're going to be testing new lows. In a bearish market, we don't know if we have finally hit the floor pricing and people might start to see the risk on such stocks to actually become close to zero and people just start to buy a little bit more. So yeah, even if, like, honestly, just look at Tesla. Look at Tesla, okay? Where's Tesla? Test. Do you know how crazy it is when Tesla lost 11.5% intraday? Yesterday, Tesla lost $108 from its entire stock price in one day. And in the pre-market, we are down another 1.6%. Tesla right now is at $814. And also, I recorded a video for a possible recession coming, and that will be uploaded on Saturday. Basically, I actually given some of my opinion on a possible recession and what we should, or what at least what I would be doing for this so-called recession. But yeah, very complicated times. But anyway, thank you guys for watching. I'm like super duper tired. You have no idea the amount of whiskey I drank earlier. But I'm gonna try to go sober. I'm gonna go and drink a cup of coffee afterwards. Because I still have to go and read out on some reports. And also, I actually want to research on the subprime loans and such. I'm kind of curious about it as well. But anyway, thank you guys for watching. Appreciate it, and yeah, leave a like if you enjoy my content, and I'll see you guys on Monday. Oh well, Saturday, because you're gonna see a new video anyway. But yeah, see you guys.